Hey traders, welcome to this week's trading vlog. This week has been a roller coaster of trading emotions for me, mainly frustration. But despite that, I've still managed to hit my weekly target of 1.5R on my funded trading account. And in this video, I'm going to walk you through my winning trade for pound dollar, sharing every step of my day trading strategy. Plus, I will be diving into the emotional side of trading, giving you some practical tips in particular on avoiding emotional reactivity when trading. As always, all of the links will be included in the description below. Please remember to like and subscribe to the channel, and let's get straight to it. Before we jump onto the charts, let's talk emotions, because let's be honest, they always find a way of showing up when trading. One of the hardest parts about trading isn't actually the technical side, but it's the constant management of emotions and mindset. It's exhausting, but staying aware and being mindful of emotions is crucial for trading performance. For example, this week I struggled a little bit with my emotions and frustration and a little bit of FOMO, and here's why. Now, before I dive into my personal story, it's important to remember that every trader is different, every trader's journey is different. There are many different variables in a person's personal life that will affect one person's trading journey from the others. For me, my biggest variable are my two preschoolers. I juggle full-time parenting Monday to Friday whilst day trading. Usually, I manage to find a small window of opportunity when I can place trades, but this week, it just didn't happen. I caught a great trade on Tuesday, which I will share with you shortly, but from Wednesday onwards, my eldest was really sick, and from doctor's visits to late nights, I was in full-on mum mode, which meant that trading had to take a backseat for me this week. Even on Friday, I tried to get onto my charts. I opened my chart on my phone, zoomed in, literally thought one thought, and then I was called away, and I thought, this just is not happening. And I have found that really frustrating because pound dollar has been in a beautiful uptrend this week. Perfect for my trend-based strategy, but sometimes you just can't be in the game, and you have to be okay with that. And that's where trading psychology is essential. It's not just managing things like FOMO, the fear of missing out, or revenge trading, but it's also finding peace and contentment with missed opportunities. More importantly, not letting the frustration affect your future trading decisions. Speaking of trading psychology, I have something super exciting to share. To help keep my mindset strong and in check, I've been using a series of MP3 tracks, a mixture of trading affirmations and guided meditations that I've been listening to in bed before I go to sleep at night.
I trust in my ability to succeed.
These have really helped me to stay focused, to reduce my emotional reactivity, and to just overall improve my trading mindset. Now I'm turning these MP3s into a hypno trading bundle, a collection of unique MP3s, and also a short course on trading psychology and mindset, along with some extra bonuses as well. I'm aiming to launch the Hypno Trading Bundle by the end of the month. And if you're interested, you can join the free waiting list. There is a link in the description below this video. Be the first to know when it's ready. Alright, now let's jump onto the charts. I'm going to take you through step by step my trade on pound dollar, showing you exactly what I executed and why. Okay guys, so here I am in my broker in MetaTrader 5. This is for the funded account that I have with the 5%ers, and you can see I took 2 trades this week. Now I've just realised I actually said my winning trade was taken on Tuesday, but looking at the data here, it was actually Monday. That just goes to show the kind of week I've had this week is that I couldn't even remember when I took my winning trade. But that makes sense that it was Monday because, like I said, mostly this week I've just been really busy looking after my children. So Monday I took 2 trades. Now the first trade was a break-even trade. I was actually short, and I will show you a screenshot of the trade. Now this is a screenshot from my phone, so it's a bit smaller, but you get the gist of it. On the Monday morning, I was into this trade short very early on because I woke up quite early and I saw the opportunity. And as London session opened at 7 a.m, price dropped down here. I was in profit, but it hadn't reached my 1R, which would be kind of like a trailing profit point. As price was dropping here, I actually trailed a very tight break-even stop, which got triggered just after this large candlestick. Now that was due to 2 reasons. Firstly, because it is during the London session, which tends to be in my opinion, more choppy and more unpredictable. My session of choice would be the New York session. I just personally find it a little bit more predictable most of the time. But you can get some good opportunities in London, which is why I took this trade. Now, the second reason that I trailed a tight break-even stop was because of market structure. Prices swinging lower, low highs, lower lows. It pulled back here and we had this very large bearish candlestick down around about 8 o'clock in the morning, breaking the low here, which meant that if price was going to turn up and hit my entry here, that would be quite a strong exit indicator to get out of the trade anyway. Now, after I got out of this, I was kicking myself because I thought I was being too cautious. But after looking at the charts, this is the same area of the chart. On the Monday, I took my short around about this level here. And after checking my charts, you can see that actually, after this big red engulfing candlestick here, price turned and it actually pushed up with a lot of strong bullish momentum. Now, it's just during this momentum that I took my winning trade here. Okay guys, I've had to just double check my trade data because I was still confused as to which day I took this trade, and now it makes sense. So I did take the trade technically on Monday and Tuesday. I took it late Monday night and it hit my target Tuesday morning, so I held it overnight. It's not something that I do a lot of, but as I said, this week has been challenging for me, balancing day trading with my personal life, and so my trading strategy has altered to just account for that. But the reason I took this trade, let's just start from the beginning. So this trade, I got into this on the Monday. Now, as I said before, I was short here, but price rallied up, and the most important thing it did was it broke and closed above a key daily level, which was the previous daily high. This shows that there was a very strong bullish momentum, which was continued up over the London session and into the New York session. And the next step in my strategy after deciding on the bias and incorporating the key daily levels would be to utilize market structure together with the Fibonacci retracement tool to find an optimum entry. And analyzing intraday market structure, during this leg we had a little tiny pullback here. Price pushed up. Just before the New York session and just as the New York session was opened, we got this nice little pullback here, this consolidation, before we got a push higher. Price kind of consolidated a little bit here before it started to drop down, which meant that the largest pullback we had as the New York session was opening was this one right here. And so I used this pullback to drop my Fibonacci retracement tool from, and I dropped my tool at the high using the bodies only. This brought up these three lines. They're the ones I'm the most interested in, which are the lines of optimum trade entry. They are the 62%, 70%, and 79% levels, which for me, for my strategy, historically, I've done this on so many trades now, both backtesting, demo trading, and live, and it's been profitable overall. And so this is what I incorporate into my strategy. And I usually like to wait for a candlestick signal in this area. Now, price dropped down and we got this little bit of a gap slide here, which can still mean that price may drop, but it's important to remember that the trend is up. And overall on the daily time frame, the trend is up, and that means that it's always going to be weighted in your favor if you are going with the trend. At this point, I decided to set a buy order. Now I set a buy stop order above where price was. So this was around about 8:30 in the evening, after my children had gone to bed, giving me the opportunity to do this analysis and make this decision. I set a buy stop order above where price was because if it was going to push up, that meant that the bulls were coming back in, the buying was coming, and I wanted to be triggered into that trade. And I set a larger stop, a 20 pip stop, which was just below the low here. I don't usually set a larger 20 pip stop very often, but as this was going to be a swing trade, I wanted to give the trade room to move. And initially I set a 30 pip stop profit. Now I got triggered into this trade and I held this during the Asian session. And all through this I was asleep. Until around about, I don't remember what time exactly, around about 6 in the morning-ish. Looked at my phone and I was basically break even, which I was quite happy with actually, because that meant that the area was holding. Now, as the London session was opening up, we were starting to swing higher, making these little higher highs and higher lows. And I did two things. So to begin with, I looked at the daily time frame and I identified a key area that I thought price would be drawn to. And I adjusted my target to aim for that for profit, which set a 4R target, which was 4 times what I was risking for the trade. And then I also set an alert at my original profit target. So price pushed up and it hit what would have been my original profit target, but I didn't have that order set, so I was still in the trade, but my alert went off. And at this point, I was just so consumed with my children and distracted that I couldn't give this trade my full attention. And for that, my biggest concern was that I was going to lose out on the opportunity by changing my original plan and aiming too high. And I had these thoughts in my head, and so I just closed the trade when it came back up to my original target here. So I got out of this trade with my original target of 1.5R, which is still a good result. It's more than what I was risking for the trade. It was my target. It's a really nice win, especially for a trade I placed the night before. I had all these reasons to be happy with that, plus the fact that I was super busy. Let me just zoom out now and play what happened for the rest of the week on this pair, and then you'll see why I ended up feeling rather frustrated with that decision, because price never came back to my original entry, but it just kept on going up. It hit that place that I thought it would hit for that larger target, and it went up probably double, if not triple that. And this is just one of those classic examples where trade management can really help to increase your profits. Because if I had, say, 2 positions open, I had a runner for the week with a break-even stop, price moved 12R from my entry. That's 12 times what I was risking for the trade. That's massive. Not that I would have held all of that, but you know, it's frustrating that I took such a small piece of this pie. It could have been a very big pie, but it just wasn't the right timing for me to be able to manage the trade more efficiently. If I didn't have to look after my children full time, things might have been differently. We will see. Trading is not all about technical skills, it is about mental resilience. Some weeks, life gets in the way, and that is okay. What matters is how we manage our emotions and come back stronger. If you've had a similar experience, do let me know in the comments below. If you've enjoyed the video, please like and don't forget to subscribe to the channel. And I'll catch you in my next video. Thanks for watching. Bye. Which meant that the largest pullback that we had was indeed this one, as the London... Which meant that... oh my god.